Life is simple, but not easy. Stock trading, on the other hand, is easy, but not simple. It is complex. If you want to invest in shares, I can give you a list of shares or list of stocks that you can comfortably invest at any price whatsoever with your eyes closed whenever you have the money and forget about it for 20 years. If you are able to do that, then I can assure you that you will get fantastic results. The reason you'll get fantastic results is these are, number one, stocks or shares or companies that are going to be around for 20 years, still profitable. Two, the price of the shares are going to increase over a period of time, of course. Three, you will get bonus shares every now and then, 4 or 5 years in one share, 2 or 3 years in the other, depending upon how frequently the company announces bonus shares. Four, the shares will get split, and then the price of the shares will rise again, which will increase your asset base. And these are really good shares, blue chip, shares such as ASIANPAINT, HDFC Bank, ICICI Bank, Titan, Reliance, TCS, Infosys, etc. Shares that we all know are good. The question is, can you do more? We all know the power of compounding, and Warren Buffett has been talking about it for years on. The question is, can you do better than that? Hello, folks. My name is Neil, and this channel is all about squeezing the last piece of potential out of the money that you've invested in shares, doing more than just compounding. This is about short to medium term trading as well as long term investing. It's very easy to invest in long term, keep money in good shares and forget about it. The tricky part is trading in shares that can give you profits within the next 2 to 3 weeks, selling when it's high and buying when it's low. And that's what we're going to be focusing on in today's session. So what you see on the screen here is a candlestick chart of Nifty. Now, as you can see, it's not a straight rise. Now we see that Nifty was here a while ago, and this is a daily chart. So what we're looking at is March 2020. This was the time when the COVID crisis hit India and the stocks fell straight. And then now we can say that we have recovered. If you zoom in, we've recovered quite a bit. And we've come to the point where we were before and probably higher. We started crashing from here and then we rose. But did we rise in a straight line? Or did we rise and then fall and then rise and then fall and then rise again? And that's the question. And that's what I'm talking about when I'm talking about squeezing the last piece of potential. It fell till here and then it rose. And then if you can see, there was a small correction here. And then it rose again. And then there was a small correction here. Now, if you would have purchased here and sold here, you would have made some money. But how much money would you have made if you would have purchased here and sold here and then purchased here again and sold here and purchased here again and sold here and so on and so forth, right? That is squeezing the last piece of potential. Now, this is Nifty, and well, you can't directly trade in Nifty unless you're doing futures and options, and we'll get to there someday. But this happens with every share that you can think of. Let's take a look at TCS, for example. Now, this is the chart for TCS. This was the 2020 crash. And then as you can, if you zoom out at any point in time, you will see that it's not a straight way up. It goes up, it comes down. It goes up, it comes down. The idea is to understand when to buy and when to sell. And every time you sell at a higher price and buy at a lower price, you squeeze that last piece of potential. So how do you read a chart? And I have a very simple video that I have posted, and I'll share the link with you at the end of this video, where I have explained how you can eyeball a chart and how you can buy at the low ends of the curve. But to read the chart, there are a number of indicators that tell you at what point the price is going to change, or at what point the trend is going to change. If it is on a downward trend, how do we recognize whether it's going to change? Now, there is a fundamental analysis way of investing in shares and knowing what's a good price for a share as well, which is a complex calculation of price to earnings ratio and looking at the industry PE and so on and so forth. But I'm not going to go into that. Here, I'm going to focus mostly on trend analysis and technicals. And what that means is there are a number of indicators that you can look into um, when you are assessing whether the price is right to buy or sell um, when it comes to shares. The indicator that I'm going to focus on today is called the relative strength index, and um, I'm going to add that indicator here. There you go. This is the relative strength index. Now, if you see, as the share price goes up and down, the relative strength index goes up and down as well. But that does not mean that the relative strength index will be up every time the price is up. Because if you really look at it, the price has gone all the way from here till here, but the relative strength index has remained well within this particular range, right? Even though the price is much higher than what it was here before, the relative strength index is not that much higher than what it was here, right? So how do we use the relative strength index? Well, you will look at the technical definition of relative strength index. You'll easily find it if you Google for it, so I'm not going to go into that. But the essential idea is that if the relative strength index is on the lower side of the curve, right, from, let's say the relative strength index is between 100 and 0. If it is anywhere below 40 or 35, then it's a good time to buy. That's a perfect price to buy a stock. For the stock tip of the day, if you look at TCS, it's on a downward trend at this point in time, but overall the stock has been doing really, really well. So I would buy the stock. I think the stock is going to go down all the way till 2926. I would wait for a while and I would buy somewhere in the range of 2,926 rupees, probably slightly higher. Um, and if this is the entry line, I would bring it down till here, somewhere around 29, 28.2, which would be a fantastic price for me to buy TCS. Today I have covered relative strength index as an indicator, but I'll cover another one tomorrow, probably Bollinger Bands or what have you. And over a period of time, we will understand how to use the various indicators that will define the probability of a price and what's a good price to buy and what's a good price to sell. I hope you have enjoyed my content. I'm always looking for feedback. If you do not agree with me, voice it out. If you would like me to cover some ideas, do let me know and I'll do my best. Other than that, all the best of luck for all of us, and I hope we make a ton of money off the stock markets. Have fun.